Ever wondered how to make profit off of stocks and dividends? Well, to answer that, we first need to understand what the stock market is. Picture it like a giant supermarket, but instead of groceries, it's selling pieces of companies. When you buy a stock, you're actually purchasing a tiny slice of that company. Now, why would anyone want to do that? Two words: profit potential. Stocks can increase in price over time, which means you can sell them for more than you paid, netting a tidy profit. And then there are dividends. Think of these as little thank you gifts that companies give their shareholders. It's a portion of the company's earnings paid out regularly. It's like getting a paycheck just for owning a piece of the company. These two avenues, stocks and dividends, are why investors choose to put their money in the stock market. So if you're intrigued about how to make money off stocks and dividends, stick around. We've got some useful steps for you. Scene script. First, we need to understand what stocks are. Imagine walking into your favorite store and instead of buying a product, you buy a piece of the company. That's what buying stocks is all about. Stocks, also known as shares or equities, represent a portion of ownership in a company. There are two main types of stocks, common and preferred. Common stocks are the most prevalent, and they provide the potential for growth through rising share prices and dividends. As a common stockholder, you get to participate in the company's success. You also have voting rights, which means you can have a say in the company's decisions. Preferred stocks, on the other hand, are a bit different. They're called preferred because the owners of these stocks get preferential treatment. If the company distributes dividends, preferred stockholders get paid first. They also have a higher claim on the company's assets if it goes bankrupt. However, they usually don't have voting rights. Now, how do stocks work? Let's break it down. Companies issue stocks to raise capital. They sell these stocks to investors who then own a piece of the company. The price of each stock depends on the company's performance and the market's perception of its value. When the company is doing well, its stock price generally goes up. This is where you, as an investor, can make a profit. If you bought the stock at a lower price and it increases, you can sell it for more than you paid. This difference is your profit. But what if the company isn't doing well? Well, that's the risk you take when you invest in stocks. The stock price could go down and you could lose money. That's why it's important to research and understand the company you're investing in. Remember, buying stocks is essentially buying a piece of a company. When the company does well, you do well. So, take your time, do your homework, and make informed decisions when it comes to investing in stocks. Now that we understand stocks, let's move on to dividends. A dividend is essentially a portion of a company's earnings that's distributed to shareholders. Think of it as your slice of the company's profit pie. Companies typically pay dividends to their shareholders out of their after-tax profits. This distribution can occur at different intervals, usually quarterly, semi-annually, or annually. However, it's important to note that not all companies pay dividends. Some prefer to reinvest their profits back into the business for growth. Now let's dive into some key terms. Dividend yield is a financial ratio that indicates how much a company pays out in dividends each year relative to its stock price. It's calculated by dividing the annual dividend payment by the market price per share. This yield gives investors an idea of the cash flow they'll get for every dollar invested. On the other hand, dividend payout ratio is the proportion of earnings a company pays to its shareholders in the form of dividends. It's calculated by dividing the annual dividends paid out by the net income of the company. This ratio can give investors insight into a company's profitability and dividend sustainability. So whether you're looking for steady income or long-term growth, understanding dividends can help you make informed investment decisions. In essence, dividends are your share of a company's profits distributed periodically. So how do you make a profit from stocks and dividends? The answer can be distilled into two primary methods. First, you can buy a stock at a certain price and then sell it at a higher price. This is the most common method people think of when they consider making money from stocks. Say you invest in a company that's just starting to gain momentum. You buy the stock at $10 per share and then, after a period of growth, you sell it at $20 per share. That's a profit of $10 per share. Multiply that by the number of shares you own and you've got yourself a tidy sum. Now, the second method is through dividends. Some companies distribute a portion of their earnings back to their shareholders in the form of dividends. This is usually done on a regular basis, often quarterly. These payments can provide a steady stream of income even if the stock's price doesn't move much. For instance, if a company you've invested in declares a dividend of $1 per share and you own 1,000 shares, you will receive $1,000. It's a bit like getting a paycheck just for owning the stock. However, it's important to note that profiting from stocks and dividends is not as simple as it may sound. It requires careful research and staying informed about market trends. You need to understand the company you're investing in, its financial health, its competitive position in the market, and its future prospects. You also need to keep an eye on the overall economic environment, as it can greatly impact stock prices and dividend payouts. Patience is another key factor. The stock market is not a get-rich-quick scheme. It takes time for investments to grow, and there will be periods of ups and downs. Don't let the down periods discourage you. Instead, view them as potential opportunities to buy stocks at lower prices. Profiting from stocks and dividends requires research, patience, and a keen eye on market trends. It's a journey that can be both challenging and rewarding. But with the right approach, it can lead to financial success. So what have we learned today? We've demystified stocks, breaking them down to their core components. We've also unraveled the web of dividends, understanding their potential for passive income. And of course, we've explored the strategies for turning these elements into profits. But let's not forget, folks, investing is not a guaranteed gold mine. It requires research, knowledge, and a keen eye for market trends. Remember, the stock market can be a profitable venture, but it also comes with risks. Always do your research and stay informed. Happy investing!